All right, now to our first conversation. As Nigeria continues its quest for inclusive and sustainable economic growth, financial inclusion has emerged as a critical pillar, not just for expanding access to banking and credit, but as a driver of productivity, entrepreneurship, and poverty reduction. From digital wallets in remote villages to small business loans through fintech platforms, the financial inclusion landscape is reshaping the country's informal economy and contributing to its GDP, with recent GDP rebasing reflecting broader participation in the digital and informal sectors. It's clear that inclusion isn't just a social objective, it's a macroeconomic strategy. Well, joining us to unpack this, we have Mr. Olu who is the CEO of Phillips and Samuel Limited, is the former president and co-CEO of OPay Nigeria. He's also an executive in residence at the Lagos Business School, and so much more that I cannot read out right now. So great to have you on the show today.
Thank you, Laddie. Good to come on your program.
Fantastic. I know I've been trying to get you on for the longest time now, and finally, in the second half of 2025, you're able to make time, because I know you have a very busy
it's a good day today.
schedule. Yeah. So financial inclusion. I know you talk about that a lot at this point, and it seems data is showing us we're seeing some kind of improvement, at this point. If we look at Nigeria's active bank account data, that's from NIBS, and we're seeing 320 million active bank accounts. That's for the first half of 2025. Closed accounts is about 29.4 million. Dormant accounts, 33.39 million. And we see total cashless transactions, that has jumped really high, 295 trillion naira. Have we reached the point we've been looking for when it comes to financial inclusion?
Thank you, Laddie. We've made a lot of progress. We have to congratulate ourselves as a country. Those data are very valid. We have also been helped significantly by cashless. I think as a country, we have taken a more introspective look at the challenges of cashless, both at macro and individual level. And we've seen a lot of more investment in digital services and uptake by a lot of our small business people. Today, pay by transfer, where even a suya seller or a market woman receives largely payment by, have a little typed paper, with the account number. It's become a norm. And that's the underlying basis of the numbers you've seen. If you look at the rebased numbers we just published by the National Bureau of Statistics, even though financial services is now about 3% in the rebased contributions to GDP. But what's important to note, very interesting, which you need to highlight, is that financial services grew 15% in year on year from Q1 GDP numbers. And when you compare that to the average GDP growth, which is about 3 to 4%, so you see that financial services growing 3-4 times faster than the rest of the economy. And that is largely driven by financial inclusion services, expansion of services to a lot of underserved area. Even though as we go along, I will talk about there's still far much more to do.
Right.
Agent banking services, pay by transfer are the real evidence on the streets of the progress that we have made in in more inclusive financial services.
Right.
Even though there's still a lot to do. Nearly 40% of Nigerians are still excluded from financial services if we use the FINA access to finance society data in 2023. So there's still a lot to do. We all need to cooperate, bring our fintechs, our banks together. Also ensuring that for my fintech colleagues, we need to make sure that we are not just serving the previously banked but underserved, but ensuring that we're also serving the completely excluded, because there are two different things. If we look at what we are doing in fintech, we know we are making a lot of progress. Far much more of what we are doing is about serving the previously banked but underserved, which are people getting a second, third account in a fintech after being banked already. If we look at how much we have taken service to people who did not have financial services at all, we still have far much more to do,
right.
Especially in northern Nigeria and among women,
Yeah,
where you have more than, in some states, for example, in the northwest, you have nearly 40%, you have nearly 60% financial exclusion. In Sokoto, Zamfara, Katsina, and other states in northwest Nigeria.
Right, and definitely we have a target at this point. This administration is aiming for a $1 trillion economy. What you're seeing, play out, with financial inclusion right now with the progress, that we've made. How much more progress do we need to get us to that level? And is it reliant on, financial inclusion to actually hit that target?
The $1 trillion economy, it's a great ambition. And we've got the potentials for it as a country. Even though someone will say now that when we look at the rebased economy based on the current exchange rate, the hurdle that we need to jump is now much bigger than we all thought when we used to be like a $450 billion economy to $1 trillion. We're now just about $250 billion economy. Right. So we need to grow 4 times. Financial inclusion or digital financial services, or including people in the digital economy, has a key role to play. The fundamental role in economics that digital economy plays and financial inclusion plays is that it crashes economic transaction cost. So essentially, the way to see that if I want to trade, I do not have a financial account, or I'm not on a digital platform, I probably will need to travel from Lagos to Kano. I cannot consummate a transaction. The search and matching cost of transactions are expensive. What financial inclusion does, when I can be paid and I can send payments, irrespective of where I can trade much longer than the length of my arm. I always say that when you are an MSME and the only thing you can do is cash, is that you cannot trade much more than the length of your arm. So by what financial inclusion would do is to extend the reach and depth of our, not just financial markets, but the markets that financial inclusion serves in agriculture and trade. One of the interesting things about the new GDP rebased number is agriculture and trade is about half of the economy, even though there are interesting dimensions to it. Financial inclusion will help our smallholder farmers be more integrated into the formal economy so that they can become more productive. A lot of smallholder farmers, when they have financial accounts, they can be better aggregated. Rural extension service in agriculture will be much better. They can be better integrated into commercial agriculture at scale, at aggregator level.
Right.
Same thing with trade. We have 44 million MSMEs. Driving productivity, driving market reach, when they can be paid and they can pay. Today, very interesting, everybody today does one form of social commerce or the other. They are trading online. This was not possible before. So someone in Mowe, for example, can now be selling a clothes to someone in Aba, and with logistics services, those products are being delivered because they can get paid. Those are the kind of things, the size and the depth and the reach of the economy and inclusive prosperity that financial inclusion will drive on the journey to that $1 trillion economy will be something very fundamental. I must add, we must industrialize. Very, very, very important. Those are some of the things that are sticking out of the...
Right, we need to get the dollars in.
Dollars, yes. Must industrialize big time.
Let them go out that much.
And inclusion, finance will play, getting more people into that space will play a very key role.
All right, so, with financial inclusion, we also have to talk about affordability. Yeah. Can the average Nigerian afford to own an account, at this point? Because, inflation, currency devaluation, that has taken a lot of people under the poverty line. And just, at the end of every month, you get all of those charges, from the traditional banks. I got a SMS charge, but over 1,000 naira SMS charge. We have the EMTL, if you're trying to send maybe over 10,000 naira, we charge you about 50 naira for that. And a couple of other charges. You just see there's VAT, there's so many charges I've seen on my account. And I'm wondering, the average Nigerian, can they afford all these kind of charges?
Very interesting question you've asked, Daddy. looking at, just supporting what you said with the EFINA access to finance research data, in 2023, the biggest barrier to financial inclusion in Nigeria, 2 times access, last mile access issues, 2 times cost issues, is economic exclusion. Things like I don't have a job, things like I don't have money to put in a financial account. It is 2x, 3x other factors in terms of barriers to exclusion, barriers to inclusion. And now, between 2023 and now, when that study was done, we've seen as we do economic reforms, the pace of economic reforms have been far more disproportionate on the low income and the poor. So what we may see if we do that study again is that those economic exclusion barriers might have become much more amplified in the short term. In fact, we need to do inclusion, we need to do economic reforms, we need to recognize that short-term pains. And therefore, one of the things we have to do about our financial inclusion journey is not just to do financial inclusion in silos. It has to be how we do it in complement with economic inclusion programs in agriculture, in retail trade, in vocational trade that employs a lot of people, so that we make them more productive in what they do. And a trader that can receive money can trade much more wider. A farmer that can receive money can trade more wider. That's one of the very important things we have to do. Tackle, integrate financial inclusion with economic inclusion programs. The other thing related to what you said is that we must look at cost issues. We need to look at affordable micropayments. In markets like India and Brazil, where we have seen financial inclusion explode significantly in an accelerated way, it's also because those countries tackle affordable micropayments. So if I want to send a small amount of money, 1,000, 2,000 naira, it should be, some of them should be much more affordable than someone who wants to send 25,000 naira. If we do that, we are going to get many more people doing digital payments, because by the time you pay, for example, USSD to the telco service, you pay the charges of the bank. Those are significant costs to the low-income people that we need to bring into the financial system. So those are some of the areas where we need to coordinate regulation, both on the telecom side, on the financial services side, so that we deliver affordable micropayments, so that transferring 500 naira feels like transferring 500 naira recharge card. We are going to see digital services and payments amplify and explode, as we have seen in India, because that's a major factor that what they call universal payment interface, Indian UPI, has delivered in India. Anyone can transfer. In fact, it delivers a lot of things free for a lot of people.
Right.
For the low income. Yes.
Right, because this is a period where even the middle class has been wiped out, you know, at this point. So everyone needs help.
It's a big issue.
Right now, with even to afford transactions. All right, so there should be that, I don't know if it's still there, you know, some kind of trust deficit, you know, with, you know, low-income people and fintechs. I think I still get it, you know, these days, you know, say, you still keep money on, you know, some of those fintechs. What if they, you know, I'd rather use the traditional bank, so I still get that, you know, most of the time. Are you seeing any improvement, you know, when it comes to trust?
Trust is built over time. What we have seen is that after 3, 4, 5 years of many of those fintechs being in business, trust and confidence levels in the markets are increasing, even though a lot still needs to be done. We must also commend the central bank that is doing a lot in terms of driving trust, tackling fraud in the financial system. For all our financial system players, I mean, when a small trader loses 10,000 naira because of fraud, to us it may be a small amount of money, but that 10,000 naira maybe is 50% of a woman's working capital for the day. She will not use financial services again if the money got disappeared. So we have to do much more in tackling fraud. The financial service companies are doing that, driven by the central bank with a very huge sanctions that I'm aware. So what you see is that people put in their first 50,000 and it did not disappear. Then they put the next 100,000 and 200,000. So over time, you're going to see much more confidence, and it is growing. Today, all the Uber drivers, the guys who is delivering your logistics services or delivering your goods for Jumia,
they always have a fintech
a fintech app because it's fast, it is agile, and they have confidence in it. So that's the way to go. And the next thing that we will see, if those fintech services can begin to layer next layer services that the banks have not delivered, like lending, access to credit to the previously excluded, you're going to find increased confidence in terms of using fintech services.
Fantastic. All right, thank you so much. It was great having this conversation with you. That was Mr. Olu Kamo, is the CEO of Phillips and Samuel Limited. Thank you for helping us
Ladi.
unpack financial inclusion today. Thank you so much.
Thank you. Good to be on your program.
Thank you.